Within the next several weeks, the Argentine legislature is set to approve new measures that will alter the mandate of the Central Bank of Argentina. The changes were proposed by the administration of Argentine President Cristina Fernández de Kirchner earlier this month and will help the government in its efforts to maintain growth amid gloomy international expectations and increasing government spending burdens. Though the immediate impact may be stabilizing, the medium and long-term outlook may not be so rosy. The proposed changes will affect mainly the charter of the central bank and the law of convertibility, which regulates the stability of the peso. Under the new rules, the central bank will be able to take a more active role in regulating domestic financial markets. It will also be able to set reserve levels without regard to the monetary base and to use excess reserves to pay off external debts. These excess reserves may also be made available for providing medium and long-term credit for productive investments. Probably the most significant measures associated with these changes relate to the convertibility law. Originally passed in 1991, the convertibility law regulates how much foreign exchange, gold, and assets the central bank must hold in reserve. Originally, the central bank was required to hold a reserve equal to 100% of the country's monetary base. That requirement was relaxed in 2002, and with these changes has been completely removed. Going forward, the central bank will have the authority to decide for itself how much of its cash on hand must be held in reserve. Currently, the central bank has about $46 billion. Though it is not yet known how much will be held in reserve for the purpose of currency regulation, whatever is left over will be subject to much more flexible spending rules. By specifically authorizing their use to pay off debts, the Fernández administration is institutionalizing the practice implemented in the past 2 years of using excess reserves to settle debt payments. In 2010 and 2011, more than $13 billion of central bank assets were used to pay off debts, and some $5.7 billion worth of debt is set to mature in 2012. It is also possible that these funds could be used in settling outstanding debt with the Paris Club lenders, which would potentially improve Argentina's access to international credit markets. The new changes may also mean the central bank, in coordination with the executive, may begin providing financing for specific projects. At the top of the list will likely be the development of Argentina's oil and natural gas industry. The government has been ratcheting pressure on the Spanish-Argentine energy company YPF in recent weeks, and the government projects that it will have to spend $7 billion in 2012 importing fuel from international markets. Aside from energy, there are a number of key questions on the minds of Argentine leaders. Inflation remains high, thanks in part to high government spending. And while attempts to cut subsidies are underway, reports indicate that their final implementation may fall short of the hoped-for savings. With the slowdown anticipated in the course of the next year or more, political popularity will be a driving factor in Argentine decision-making. By increasing access to central bank capital, the government gives itself more room for maneuver in the short term. In the medium term, continued high levels of spending is sure to keep inflation high. And among the long-term dangers, too high a reliance on central bank reserves could weaken the institution's ability to stabilize and protect the Argentine peso, putting the country at risk of yet another currency crisis.